Webull Taxes Explained is a comprehensive guide to understanding the tax implications of trading with Webull, a popular online brokerage platform. As a trader, it is essential to understand how taxes work to minimize your tax liability and maximize your profits. First, let's start with the basics. Webull is required to report your trading activity to the IRS, and you will receive a Form 1099 at the end of each tax year. This form will show your total gains and losses from trading, as well as any dividends or interest earned. When it comes to taxes, trading activity is divided into two categories: long-term capital gains and short-term capital gains. Long-term capital gains apply to assets held for more than 1 year and are taxed at a lower rate. Short-term capital gains apply to assets held for 1 year or less and are taxed as ordinary income. For example, if you buy a stock and sell it within a year, any profit you make will be considered a short-term capital gain and will be taxed as ordinary income. On the other hand, if you hold the stock for more than a year, any profit you make will be considered a long-term capital gain and will be taxed at a lower rate. Another important concept to understand is wash sales. A wash sale occurs when you sell a security at a loss and then buy the same or a substantially identical security within 30 days. In this case, the loss will be disallowed for tax purposes, and you will not be able to claim it as a deduction. To minimize your tax liability, it is essential to keep accurate records of your trading activity. This includes recording the date and price of each trade, as well as any dividends or interest earned. You can use Webull's tax reporting tools to help you keep track of your trading activity and generate the necessary tax forms. In addition to keeping accurate records, there are several best practices you can follow to minimize your tax liability. One strategy is to offset gains with losses, a process known as tax loss harvesting. This involves selling securities that have declined in value to realize a loss, which can then be used to offset gains from other trades. Finally, it is essential to consult with a tax professional to ensure you are meeting all your tax obligations and taking advantage of any available tax savings. They can help you navigate the complex world of taxes and ensure you are in compliance with all IRS regulations. By following these steps and understanding the tax implications of trading with Webull, you can minimize your tax liability and maximize your profits. Remember to keep accurate records, offset gains with losses, and consult with a tax professional to ensure you are meeting all your tax obligations.